to Staff Works Explained. If it's your first time here, please subscribe to this channel. In this video, we'll be talking about Tanzania Sgr, where we'll be having an update on what is happening as far as the implementation of this project is concerned. Tanzania is looking for Plan B for this Sgr project, as Yapi Merkezi, who is the contractor in Lot 1, 2, and 3, is currently facing some financial distress. Yapi Merkezi is building Lot 1, which runs from Dar es Salaam to Morogoro, Lot 2, which runs from Morogoro to Makutupora, and then Lot 3, which runs from Makutupora to Tabora. And this covers a total distance of 1,990 kilometers. According to the East African, which is a weekly newspaper published in Kenya by the National Media Group and is circulated in the ASA region, this paper announced that Tanzania has embarked on a fundraising initiative in the wake of Yapi Merkezi, the Tanzania Sgr contractor, facing financial difficulties. The article that was also published in a daily that is widely circulated in Tanzania, The Citizen, it reported that, or it highlighted that the Turkish firm Yapi Merkezi, in partnership with Portuguese firm Mota-Engil Africa, is facing financial distress. This is significant since Yapi Merkezi is responsible for the construction of a substantial portion of Sgr project, that is Lot 1, 2, and 3, with the Sgr project considered to be a crucial part of the Tanzania infrastructure, where Tanzania is seeking to position itself as a key trade corridor for East and Central Africa. This project is seen as a critical infrastructure project to enhance transit, trade ties with neighboring countries, and also strengthen economic connectivity in the region. And therefore, the government gets concerned by when there are reports that the company is facing, or the contractor is facing, some financial distress, which are likely to cause delays in the completion of the project. The papers reported that the Tanzania Minister of Finance, Mwigulu Nchemba, embarked on a European tour to secure funding for the Sgr project. During his visit to European countries, he has managed to secure tentative pledges from Spain, Sweden, and the African Development Bank. These pledges are aimed at supporting the completion of various phases of the rail project. During the visit to Spain, the minister met with Spain's Deputy Minister for Industries, Trade and Tourism, Siana Mendez, who pledged support for the Sgr project in the form of loans, loan guarantees, and insurance for Spanish company that win tenders for the remaining phases of the railway that has not been contracted out. In Stockholm, the minister held talks with the representatives of Sweden's Export Credit Guarantee Board, EKN, which is understood to have acted as a guarantor for the several banks that sponsored Lot 1 and 2 of the Tanzania's Sgr. He asserted that the initial test run for the Dar es Salaam Morogoro Makutupora stretch would proceed as scheduled in December 2023. The test runs were postponed, or have been postponed several times this year without proper explanation, and they were scheduled for August only to be pushed back. The African Development Bank pledged $3.05 billion, and this was made during the Korean Africa Economic Cooperation Conference, which was held in Busan, South Korea. And these will be for the targeted Kigoma, Tabora, Uvinza, Malagarasi stretches, which have been tagged as Lot 6 and 7. The bank president, Dr. Adesina, said after meeting the minister, Zanzibar Minister for State, responsible for financing and planning, Saada Mkuya, during the sidelines of the meeting, he said that the bank would work on making the funds available for the project. Dr. Adesina also pushed for more private sector involvement in the project and urged Tanzania to make more use of African Development Bank non-sovereign window which caters for private sector borrowers for state-related projects. The first two phases of the project, Dar es Salaam, Morogoro, and Mota-Engil, which were constructed by these contractor Yapi Merkezi and Mota-Engil, are almost being completed, with progress reported at 98% for the Dar es Salaam Morogoro and 95% for the Morogoro Makutupola section. However, the third phase, Makutupola Tabora, which was awarded to the same contractor, is what is experiencing delays and financial difficulties. According to newspaper reports, that they say that there is lack of transparency and information regarding the issues faced by Yapi Merkezi, and that the project progress is uncertain. Tanzania government officials, the works, the Tanzania Railway Corporation, and even project coordination department are also not providing details or explanation as far as this delay is concerned. Tanzania, as we know, is actively seeking funding for the remaining phases of SGR, which are essential for the completion of the railway network. These efforts include negotiations with foreign governments and financial institutions. Africa Development Bank has committed a substantial amount of money, which is in tune of $3.05 billion for specific sections of the SGR project. There is also some pledges from Sweden and Spain. Tanzania is engaging with foreign entities, as we have said, Spain, Sweden, and others, for loans, guarantees, and support of the SGR project. So this is a demonstration that international players are interested and are committed to the successful of the project. However, the news that Yapi Merkezi, the main contractor for these sections, is facing some financial difficulties is news which is not welcomed. There has been cases of workers striking. An article which was published by Chanzo Initiative claimed that Turkish workers employed in the Yapi Merkezi company have been on strike since August because they have not been paid for months. An article published in Bloomberg reported that Yapi Merkezi was facing some financial difficulties in its SGR project in Tanzania. The article reported that Yapi Merkezi is in talks with banks to structure around $1 billion of loans. This suggests that the company is struggling to repay its debt. Yapi Merkezi owes lenders around $3.2 billion in total, and this is a significant amount of debt for companies such as this. The article also mentions that Yapi Merkezi project has been delayed by months due to a number of factors, including unforeseen geological challenges, the COVID-19 pandemic, and also the economic situation in the mother country, Turkey. The cost of the project has also increased significantly since it was first announced. These delays and cost overruns have put the strain in the Yapi Merkezi finances. The company has to cut costs and delay payments to contractors and suppliers. This has led to a number of strikes and protests by workers on the project. The article also mentions that Yapi Merkezi has been accused of corruption and mismanagement on the project. For example, a recent report by Tanzania Controller and Auditor General found that Yapi Merkezi had overcharged the government for a number of items. The financial challenges faced by Yapi Merkezi could have a significant impact on the SGR project in Tanzania. If the company is unable to secure financing, the project could be delayed or even cancelled. This would be a major setback for Tanzania, as the SGR project is seen as a key driver of economic development. The Tanzanian government has said that it is committed to supporting the SGR, but it's unclear how long it can continue to do so if Yapi Merkezi continues to face some financial challenges. So we'll be looking to see how this transpires, whether Yapi Merkezi will solve its issues and proceed with the remaining portion of the project, or what will happen. So we'll keep you updated on what transpires as far as this is concerned. Thank you for coming this far. If it's your first time, subscribe to this channel. Also watch other videos that we have made on Tanzania Sgr and other Sgr in Africa. Thank you.